Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the Hurt, and Lanny from the Dividend Diplomats. Guys, welcome back to a nice Sunday edition of another Dividend Aristocrat on sale right now, based on current metrics, not how high that stock price has risen in the last 5 years. Is it a good time to throw some money and buy this stock right now?
Smash that subscribe button. Give this video a thumbs up, guys. We're doing a swag giveaway here. Lanny, what do you think? Let's make this one easy. 200 likes. Get this video to 200 likes. Comment about your favorite undervalued dividend stock and make sure you say at the end of this video, are you buying the company we're talking about today?
There it is, guys. Just got to like the video, subscribe, and comment, guys. 200 likes by the end of Monday night. You got 2 days to juice this bad boy, guys. Sunday and Monday. Your two biggest coffee guzzling days, guys. So here we go. There's a certain industry that sometimes always shows its value. You know, Bert, you own quite a few stocks in the industry. I think I even own a few stocks in the industry. They continue to manage risk, manage a nice portfolio, generate returns, generate some nice passive income from the dividend stock portfolio. And a lot of them have just decades and decades of dividend growth.
Yeah, I mean, it sounds great.
Yeah.
Sign me up. That's why we own stocks in this sector.
Yeah. Tell me more. Would that be of interest to you?
Yeah. Well, and we are going to talk to you about insurance today, everybody.
Yeah, we're in the insurance industry.
Yeah, that's the sector we're talking.
Yeah, we sell insurance. Would you like some?
Diplomats Insurance Agency. That's what this video is really about.
No, Bert, you own Cincinnati Financial, right?
That I do.
Any other ones outside of this stock that we're about to talk about?
Let me think about that. Oh man, sorry everybody.
I don't think you do.
No, I don't think so either.
We own Travelers.
Yes, I do not own Travelers.
And guys, we are talking about, yes, we are bringing him back. The Duck, Aflac.
Aflac.
There it is. There it is. Bert's got it.
Is Google in this sector? Because I own them.
Yeah, are they?
Yeah, I'm kidding. Is Leggett and Platinum Insurance Company?
If only
Intel.
Yeah.
Yes. I mean, we have Elevant Health, but that's
true.
It's insurance. It's just different type of health.
It's bigger but smaller.
But insurance.
Yeah, but insurance. Yeah, so Aflac, guys. AFL, not the American Football League. AFL, Aflac, guys. Big stock here, 50+ billion in market cap. Stock price is actually down, Bert, this year, 3%.
That's surprising. That's very surprising, actually.
They've been on fire for 5 years, right?
I'm still kind of shocked that their market cap is only 54 billion. That seems very small for me for this company.
Yeah. No, especially after 179% of a return in the last 5 year, guys. 179%. We got to repeat that because they are crushing the S&P 500 in that department.
Yeah. So, well, Lanny said the insurance companies manage risk well. They manage portfolios. That's really the name of the game for insurance companies. The ones that win are the best at identifying the areas and setting premiums at the right level to cover their losses on the insurance expenses. But then they take all those premiums you get and they build out investment portfolios. So the best are not only the best at managing the risk and underwriting well and covering those losses, but also investing well and getting investment gains and losses. So that's a huge chunk of the insurance sector and where these places pump out so much money from.
Yeah, exactly. They're managing investments at the end of the day. And now, guys, what happened in the first quarter of this year? Stock market was down. So Q2 earnings hasn't come out yet. That will come out here on Monday. So by the time you guys watch this, just wait till tomorrow. Q2 earnings will be out. But Q1 earnings, we could still recap. They had almost 3.5 billion in revenue. That was actually down almost 2 billion from last year's first quarter. And it's the perfect storm. They had $1 billion in gain last year. They had $1 billion in investment losses this year. So that is your $2 billion swing. So in a nutshell, revenue is fairly flat if you take out investment, the swing of the tradable securities.
Yes. Earnings per share. When we talk through that, earnings per share for the quarter, this one was more interesting. $1.76 for earnings per share
You'll know why soon.
versus $1.65 for the prior year. So that's a 6% growth rate.
Yeah, so they had growth in just their calculated earnings per
Hmm.
share. However, when you start adjusting
Hmm.
it similarly, you get back to being flat. But how did they get to a calculated higher earnings per share, Bert?
All right. So let's talk about the earnings per share equation. Earnings divided by outstanding shares. So if we already said earnings were essentially flat or there was a small gain, sorry, that's not what I apologize. Is that there were heavier investment losses on the top, so it flows down to about the bottom line decreasing, but earnings per share went up. What else must have changed in this equation that would have fixed it? You guessed that there was a change in that outstanding shares, and that's you fix the denominator, Lanny. They cut out a huge chunk of their shares, Lanny. Their share count dropped 5%.
Wow. When you cut out 5% of your shares in one freaking quarter, guys, pretty insane. I mean,
Yeah.
that is we're not talking like 100 shares, 500 shares. They were chopping off millions of shares outstanding in a quarter alone, 5% of their shares outstanding. That's impressive. So that then boosts up your earnings per share, hence why you might stand a chance to actually show higher EPS,
That's
guys.
wild. I'm just looking at it on Seeking Alpha here.
Yeah,
Their
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 ton of shares.
yeah, their current outstanding shares is 550 million. So yeah, like last year, like they're chopping out a significant amount of shares. Is all I'm gonna say. That's a lot of
They're
shares.
managing earnings per share in an indirect way.
Yes. So just remember that, everybody. Management's buying shares to prop up their earnings per share while they're catching those heavier investment losses there that were chopping down revenue and chopping down earnings. They still were able to manage it through strong balance sheet.
It's a beautiful thing sometimes.
That's a beautiful maneuvering.
Now, Bird owns Aflac. I own Aflac. We've bought them at such low prices over the last decade plus that we've owned them. But it's time to see if Aflac's a stock to buy now. We are going to run them through the patent pending dividend diplomat stock screener, guys, focused on PE ratio, price to earnings, payout ratio, and dividend growth. We will look at that dividend yield, guys. Stock price is under $100 a share right now at $99.36, down 3% this year. Earnings per share per Seeking Alpha is $6.74 projected. That's a 15 PE ratio.
Okay. Not bad for the sector. Not bad. Payout $2.32 is their annual dividend, so that gives you a payout ratio in the mid 30%. And again, very solid, below our perfect payout ratio range of 40. Yeah, that's what you want to see.
A lot of room to grow because that's exactly what Aflac does. Over the last 5 years, some years we even get double bangers, right, Bert?
Yes, we do.
They have grown their dividend annually on an average of 21.43%.
Woo! Love it.
That beats inflation. That beats any money printing that's happening, guys. This is what it's all about. 21.5% income growth. Wow.
All right. And they've done it for 42 years. Since the yield's been flat, since they've been flat, their yield hasn't moved much. Their dividend yield, though, is 2.33%, which you pair that with a double-digit growth rate, that's a very solid dividend compound factor.
Now, guys, remember, they're up 179%. So here we are. 15 PE, 34% payout ratio, 21% plus average dividend growth rate, 40 plus years of growing dividends, knocking on that dividend king door.
Knock, knock, knocking on heaven's door, dividend kingdom's door.
So, guys, the question is this a stock to bounce on right now, being down 3% while the rest of the market's up? Because you better know that they're going to be showing probably a Q2 investment gain on their portfolio.
You
Um,
don't
yeah,
say.
I would assume and hope so. Curious on how much Bitcoin these insurance companies own, but that's a whole other story. Um,
That goes into a risk management strategy.
I think the stock is undervalued right now.
Right.
I think at the price points that I've bought them at in my lifetime, I think it's always hard to go back and increase your weighted average purchase price. I'm
Yeah.
trying to look it up right now. I don't know about you.
Yeah, I mean, I bought it later, so I don't have the same. But I guess while you're saying that, I'll
Yeah, I
say,
bought them in the 50s.
where did I get them? I think in the. Oh, let me guess.
I got them in the 20s as well at one point. 20s and
I
30s.
probably
20,
got them. I'll look up my broker. Let me pull it in up the purchaser. Give me a
yeah,
second.
25, got a very low. This is one of the largest positions in my portfolio.
Yeah.
So I'm probably not personally looking to add, but if you wanted to start a position in Aflac, right now is a great price.
Look, it's not a sexy company. It's not. It's never gonna be like your yes, my flagship stock that I bought is like Alphabet, and everyone's gonna go like hand fist the bar. Like this is fantastic. I bought Tesla, I bought Nvidia, all these companies. But it's just a solid freaking company. They're still up almost at 200% in the last 5 years. It's a great foundation stock. I know they didn't crack our top five foundation stock,
Mm.
but if you're looking for a company that is great, I bet you if we expanded it out to a top 10 foundation dividend stock, Lanny,
Oh
there's
yeah,
a
Aflac's
hundred
great.
percent chance Aflac would be in there. It's a fantastic baseline company. It's not going to win you any popularity contest, but it'll win you on the portfolio front, and that's what matters.
What about you guys? Are you liking this video? Are you leaving a comment and subscribing to get to that swag giveaway for 200? Let us know. Let us know if you own Aflac stock. Let us know if you think this is a stock to buy right now. We are holding simply because of how big of a position we have and the entry prices we've had. But we are saying, again, not professional advice, but that this is a great stock to buy for your portfolio.
My first purchase of Aflac, I just pulled it up, was it 29.52. So it's doing great, but yeah.
Bert's got a bag right there,
Yeah.
guys.
Oh, I bought a second tranche at 29.14. So I got it in the 29s. So yeah, it's a hard, tough pill to swallow, but it's a fantastic company, everybody.
Yep.
Don't forget 200 likes to this video, and we will be giving them away some diplomat swag.
Oh, yeah, that's right, guys. So like it, subscribe, comment. And there's one thing we got to tell you, jabronis, you're either with us or you're against us. Jack, that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.